in today's lab. And thank you everyone who showed up today. I'm excited to kind of discuss this topic with you. Like Andrea mentioned, my name is Kristine Nguyen. I'm the founder and accountant at Pretty Books. My team and I work with small businesses providing bookkeeping, back office support, and strategic consulting. So for today's lab, we're gonna focus a little bit more on cash flow, gaining cash flow clarity through forecasting. So let me start my screen share here. Hope everyone can see it. There we go. Can everyone see my screen? Yes, okay. So for today's lab, we're going to be discussing cash flow. So the circumstances around COVID-19 not only causes concern and uncertainty in our personal health, it also disrupted the way of business. In business, cash is king. I think we all agree that things are not quite as normal and tomorrow is not like yesterday. You're required to look ahead. Make decisions now. However, looking out is not so easy. There are always more questions. Nothing is definite. How much money do I have? Where did my money go? How much money do I need? And how long will my money last? Good news, you are not alone. Clearing the fog is something every business does, big or small, crisis or not. This is because the interplay of profit, cash in the bank, and investment is dynamic. Your goal is to clear out as much of this fog as possible, letting you plan better and make informed decisions. So what does that mean? It means know your numbers, get clear on your financials. Okay, so how do you do that? So I have 5 things here that I listed out to help you clear this fog. The first thing you need to do is get your bookkeeping in order. In order to anticipate what is to come, you need to have real, reliable information on what happened and what is happening. Make sure bookkeeping is done weekly and monthly. You need to know your numbers now, not in 3 months and not when your CPA comes calling. So that's the first thing. The second thing you need to do is interpret your financials. It means read your financial reporting. This does not mean print your profit and loss statement and looking at the number at the bottom of the page. Not that. What you really need to do is you need to figure out your trends, review how much money you made and how much money you spent every week and every month. Run those numbers by month, by week, by day. You can also favorite a set of reports. They are all numbers on a page, but ask yourself, what does this report reveal versus that report? You can run the profit and loss statement, the balance sheet, the account payable, the aging, the account receivable aging. You can run it by this month, this time last year, by month, by weekly, accounts by total, accounts by detail, and the general ledger. You need to look at everything. You need to look as many as you can and try to ask yourself what in this order of numbers or this style or this presentation of your numbers, what does it mean and what does it indicate and what does it reveal? So you need to scrutinize those numbers, left, right, up and down. You need to know every nook and cranny of those numbers. Click on those totals, play detective. What, how, why, and how much? Explain those numbers. Do they make sense to you? Is there a pattern? Is it trending positive or negative? Did I expect this or am I surprised? So as you can see, interpreting your financials is an exercise you go through. It's a detective work. It is an investigative work. It is trying to summarize and understand top level view and in detail what is going on with your money and how it's moving in your business. It is not running a report, printing it out, and then going straight to the bottom to see, or wherever is your favorite, right? Your favorite could be your revenue line or your net income line, or how much money do you have in a bank? That is not interpreting your financials. That is one thing you can do, but interpreting your financials is a complete exercise of all of the above. So the third thing you need to do to get clear is identify the flow of your money. What I mean by this is list out all the money you owe people and all the money people owe you. And yes, include all the money designed to be forgetful, the auto pays and subscription. Let me repeat, list out all the money that people owe you and all the money you owe people. Of the money you owe people, list out also all the money that you set on auto pay and subscription. Those are things your company pays out also. You need to be aware and very detailed what that means. Don't skip over them. You need to define what is debt or collection was for. Money to run your operation, which is operating money, money to make money at a later date, which is investing money, or money to obtain more money and ownership, which is financing money. So really understand, like, what is this debt or collection was for? Is it to run your business, to buy something so that you can sell later, or is it to finance something so you can continue your business or to get more ownership, right? You need to describe the nature of the money. When will I collect the money? When will I need to pay that money? How much? And how much will I get and how much will I pay, right? So with that, I just want to kind of explain that a little more. When you're identifying the flow of your money, you're not just thinking about in lump sum, oh, I'm going to get this much money and this is how much I owe someone. You need to really understand your relationship, your business engagement with that customer or vendor or contractor, and really understand, like, what promises did you make? What negotiations did you make? What terms do you have? And really understand whether it's a fluid relationship, is it a very rigid relationship, and what type of money is it? Is it to pay off debt, or is it to really for operation? Is it necessary right now, or is it something that you've been accumulated for a time and now need to pay, right? For debt, like I said, what did I promise? Have I negotiated? And when will I pay it off? For collections, what is its likeliness? Is it going to be timely? Have I done everything possible to guarantee it? So knowing the flow of your money means having a sense of clarity, picking up the phone and calling your customers if you have customers, that determining what's its likeliness, whether it's going to be paid on time, or are they going to make partial payments? Did you call them and confirm that, or are you just making assumptions? Or is this customer not going to be able to pay because they need to extend their terms? In terms of if you are retail or restaurant, what does it look like? I mean, how much money did you make today, and what is that trend? Is it going to be kind of similar tomorrow, or is it going to be different tomorrow because it's not a weekend? So really have a clear understanding of the likeliness, the scenarios, and how much and the timing of this money, right? So that's what it means to identify the flow of your money. Again, it's an exercise to really either write it out, jot it down, or review. This is in combination with the first three things I mentioned, which is get your bookkeeping in order, interpret your financials, then you can really investigate, and which is identify the flow of your money. And identifying the flow of your money has an additional element, and that is identifying the relationship of the people you owe money to and the people who owes you money, which is not spelled out always in your bookkeeping program. The fourth thing to do right now is calculate your cash flow runway. So what does it mean? Based on what happened last week, last month, what do you think will happen tomorrow? Reflect on your expectation. This is not the time to be nice. Challenge your perspective. What information are you basing your assumption on? Is it reasonable? Create a matrix and align all your money assumptions by week, by month, in order of what will come first. Align your money inflow and money outflow against a timeline and on a calendar from today to tomorrow. Then you need to, so by definition, collection minus payable is your net burn. Ideally, you want more positives than negative. Look at your current cash available in your bank. That is your cash start. Then add your burn each week. That will be the cash end. Your cash end this week and your cash start next will be your net cash start next week. Repeat this. This is your cash flow. So in simpler terms, I tried to make that simple, but so basically you need to take your money that you know how much money you have right now, and then based on the bookkeeping you've done, based on the analysis you did with your business, based on your own assumptions and understanding and insight as a business owner and all the investigation that you just did, you need to write down what do you think how much money is going to go out tomorrow. And you are doing this either on a weekly basis. Some people, you can even do this on a daily basis, write a 30-day, timeline out, or a 4-week timeline out, and say, well, how much money is going to come in and how much money is going to go out based on the promises. That's why those SaaS softwares are really important. You need to know if it's going to be taken out on the 15th or the 10th or the 5th. You need to know, or else if they all take out at once, you're just going to be in deficit, right? So you really need to understand whether you're like the time, right? The time which the money is available versus the money that goes out, whether they are aligned. So the only way to do it is put the cash inflow and cash outflow next to each other against a timeline and add it together to see if it's positive or negative. Negative means you are spending more money that day than you brought in, and positive means the opposite. You can put it in a week and sometime in a month. So that's how you know when sometimes it feels like you made good money that month, but if you look day by day or week by week, you will feel the stress of, well, why is certain days I don't have money, or why does certain weeks I don't have money? And by doing this exercise, you at least are now aware and acknowledge the issue, and then you can make actions. You can take actions. You can either call the vendor or customer to renegotiate that term or turn it off, right? And so that you can align it so it's more positive, or at least hit neutral and not negative. This at least relieves your stress. So the extra credit here is if you take a look at the cash balance again and divide it by the average burn. The average burn is really your cash inflow minus your cash outflow. That's your burn. The average burn, whatever that is, if you take your money you have right now and divide it by the burn, that is how many weeks or months you have till you run out of money. So I definitely can talk more about that. So definitely number 4 is do your bookkeeping, learn to read your financial statements and all the reports that's come out of bookkeeping. Number 3, figure out the flows of your money in the relationship. And 4, calculate your cash flow runway. Then 5, confront your numbers weekly. Do this. Get over your fears. Look at those numbers and look at them often. This is your story. Break down your questions and attack them one at a time. Think habit forming. Financial clarity is work. It requires commitment and discipline. Good news is this is like building muscles. The more you do it, the stronger you'll get. And there you go, the playbook to gain clarity on where you stand and where you are going. In summary, do your bookkeeping, read your reports, identify the money flow, calculate your runway, and be relentless at getting clear with your numbers. And remember, you do not have to go at it alone. Surround yourself with good support. This is a lot of different things, but very good to kind of follow and make sure you have pieces of this. So that concludes my presentation. We do have a toolkit on our site that you definitely can run your cash flow, and we can talk about it later.
Great. Thanks, Kristine. So today what we're going to do is I'm going to call on people to give us a little more detail about the questions that they submitted in advance. So I'm going to start with Kelly from The Works, Seattle. She initially submitted a question about the relationship between managing your P&L and your cash flow forecasting. Kelly, I was wondering if you could unmute yourself and just explain a little bit about your concern about this and why it was the question that you wanted to ask.
Sure, thank you. Forgive me for not being dressed yet today. I've been with my kids this morning. Kristine, thanks for your presentation and your information. I guess my question is, I feel like the P&L is such an important tool, especially given the current challenges that so many businesses are facing, but it feels more retrospective. And so I really appreciate today's topic about cash flow and trying to think through like, well, how do we look forward and how do we make smart decisions about investments that we can make or hires or battening down the hatches a little bit because cash is tight. I guess I'm just trying to, I don't have a good way to phrase this, but I'm trying in my mind like to understand the relationship between using cash flow as a tool to make decisions versus a P&L.
Sure.
Does that make sense?
Yeah, no, it's a really good question. I get a lot of similar questions in different variation, so you're not alone. I think one of the biggest misconception is that, you know, when you do your bookkeeping and generate a profit and loss statement, somehow doing this process of accounting and bookkeeping, it should give you all the answers you need to make decisions about your business. The reality of it is most businesses have the accounting function inside their operation, and they have something called the finance function inside their business. So accounting is looking from present to history, and then finance is looking from present to future. So you want something of a hybrid, right? So you want to do your P&L, because when you do your bookkeeping and when you can run reports, it's a validation of what happened. At least you can check on it, right? But also a proper profit and loss statement also reveal whether you're profitable or not. So a good example is if you have inventory, you will always spend more money this month because you need to buy inventory in order to be in business next month. So you can be very profitable this month based on what you sold, but your cash is not going to be that great because you still have to borrow the cash that's in your bank to invest for something in the future. So you're going to always, so most businesses, they can have great sales, they can have great profit, but that doesn't mean they have great cash, right? So it's two different disciplines. You can use your profit and loss statement or any bookkeeping reports to benchmark your assumptions about the future, right? So if I look at the last 4 weeks of my bookkeeping or the last 4 months of my bookkeeping, I at least know my overhead. I know this is how much I need to spend on software, on telephone. There's things that have changed because of recent activities. That at least benchmarks me. But then for cash flow forecasting, it's really to measure, based on your understanding and insight, how much of that will stay the same and how much of that will change. And that is forecasting. So if you think of cash flow, it's almost like a future P&L, where a P&L is backward, but you're using it as a guiding point. Now, P&L is very, very good when times aren't changing so fast, because then it's a good way to say, well, I have a full year plan. Am I staying on top of my growth? Am I making money? So the question of, am I making money, is only answerable by a good P&L and not cash flow. Cash flow can involve debt, investment, finance, that credit card. So that's also cash. So therefore, that's not really profit, right? Wonder if that answered you.
Yeah, great answer. You have such a comprehensive understanding of all of this. Andrea, is it okay if I ask my follow-up question? I put a question in the chat on your last couple of slides here, which is related to the cash flow tool. I think I understand, like, you can take a running average of your cash out. That makes sense to me, and kind of accounting for like, oh, this was an exception or this is more standard. When we are forecasting forward in terms of cash in, would you look at that similarly of like, this is what we expect for the month, or would you really only recommend putting into your model, like, these are customers that we know are going to pay?
You should only put in what you can guarantee, what you are really close to. Your goal is, it's like a game. You're going to get to, like, your cash flow model and how much your prediction is never going to be 100% correct, right? It's not going to be 100, but you want to get pretty close. You want to get to the 95% right there. It's pretty sweet. And so if you're putting in money that you're hoping and you're not going to get on that date, then you're going to be off. And you already know that. So your point of a cash flow model is to be as real as possible. And reality may not be what you hope for. So, but that's the goal. You want to see clarity. You want to know that, you know what, I have this billable out there. It's really cool if I can get it. But the reality is it's unlikely. And this is my situation, and at least I know, and I have, if they can't pay me in 30 days, this is my situation and I need to solve it.
Got it. Thank you.
Great. Thank you, Kelly and Kristine. The next question is from Stacy. Stacy, if you could unmute yourself and give us a little more context, that'd be great. You were asking about your EIDL loan and would like to know if you can pay yourself as a sole proprietor. Do you want to give us a little more detail there?
Yeah, can you hear me?
Yes.
Okay. Yeah, I just got 25,000, and I want to know how to use it the best way. I'm an artist, and I'm kind of starting all over again in a way, because I was working at Pike Place Market, and since it closed, I haven't gone back. And I just want to be able to organize everything. Like, because I'm starting fresh and I have now this money to invest. And I don't really want to, I have stock because I hand paint baby clothes and I paint canvas and I have all the materials pretty much. I just want to be able to have some money coming in while I'm creating things to put on my website to sell. And I am getting little sales here and there because, I'm an established artist, so I do get commissions, but I want to pump that up because I don't have the cash flow that I had when I was working at Pike Place Market.
Sure.
So
it's a very interesting question. The EIDL loan is designed for you, to rebuild your business or to maintain your business in a crisis, right? And so, I think the general consensus is the EIDL works like a loan. It's not like a PPP. Your business already took it as a loan that you're going to pay interest on. So, you should be able to use that money in whatever way you can support to defend the act of building and maintaining your business. So you definitely don't want to do anything that's out of consistency. So let's say, last 6 months or last year, you took about $500 or $1,000 out as a business owner's draw because you are the employee of your business, right? You need to be in existence in order for your business to exist. And so, so therefore it's like paying an employee. So if in the last 12 months, that is the consistent draw, then you can use the EIDL to either match or go lower than that, but try not to do anything out of consistency from what you usually do. So if you're paying yourself $1,000 every month last year, then I think it's reasonable to also pay yourself as long as you are working full-time for your business like you did last year. Right?
Okay, thank you.
Thank you. And I'll just say we are going to be sending out all the slides and we'll be recapping some of these questions as well.
Oh,
So
sorry, Andrea, can I add something really quick to
sure.
Stacy? Stacy, I just want to add that because you're sole proprietor, just be careful that if you do take money out of your business as a distribution, it will be considered as a taxable distribution to you personally. So it's like an employer paying you wages, right? So you are the employee of your business. So I would advise that you discuss this plan with a tax CPA and make sure you understand your tax liability or potential tax liability before you move forward. That's the number one thing to consider. It's not whether you can take it out or not.
Okay, thank you.
Thanks. Our next question is from Elizabeth of Rusante. Elizabeth, we'd love to hear from you. She's asking questions about integrating accounting systems with multiple POS systems. So she was asking about best practices, but love to hear from Elizabeth and her concerns around that question.
Absolutely. Thank you so much, Andrea and Kristine. Can you guys hear me?
Yep, we can.
Great. My question really is about best practices around putting together one dashboard that pulls all your data in from, the multiple POS and other systems that, in my particular case, that I'm using to sell. So how to pull all that information into one easy dashboard that you can look at daily, weekly, monthly, as we should be, and just have it all in one place. Right now, my information, my data is fragmented, so I'm building my own spreadsheets and looking at the data that way, but it's really time consuming. And I was wondering if, I can't afford a software system that does that all for you, but is there something that's, I don't know, is there a best practice around that?
Yeah, so I get some variation of this question all the time. So like you said, if you are looking to build like more of a company dashboard where you're trying to look at the graphs and the movements live, or not, across your different platforms, and maybe what's selling, what's not selling on a day-to-day basis, that is pretty comprehensive. That is definitely something where you either have to do something very custom or using a very expensive software like Domo to do it. The other way is using is considering not live data, which is more like Tableau, and building your dashboard that way. And then below that, obviously, is just Excel and Google Spreadsheet, which is a lot of manual work. I don't think without spending, a lot of effort, and it's also very highly technical to build a custom dashboard. And unfortunately, there isn't something that combines all of them like that at this point. I do want to consider that, to ask the question what exactly you're looking for. If you are looking to just having a snapshot and understanding your streams or understanding your profitability, that's something that you can, make sure the accounting is done correctly in terms of your bookkeeping, but then building just a basic Excel dashboard and populating it is really the only way. We do that all the time for our clients too. And I do understand the work that goes behind it.
Yes, and it was really just that, getting, having a shortcut really around all that work, all that manual labor that it entails, pulling everything into a spreadsheet, because I do use my online store for incoming sales as well as other platforms. So, and I also invoice manually for some of my wholesale customers. So there's a lot of different streams coming in, and it's just, it's a lot of work.
Yeah, it is. And I totally understand where you're coming from. I mean, for each platform, you'll have to evaluate that the data you want, and then, also make sure you reconcile it against your cash to make sure that data is correct. And then put it together in a fashion, either on a Excel model or spreadsheet that lay it out the way you like to see it. And that's the whole design and custom process. And then outside of that, obviously you can, I mean, beyond that, it's very technical where you're looking at APIs and pulling these data in automatically, which is, we're going into programs like Domo and things like that.
Thank you very much. That's what I feared.
Thank you. We have one more question that's been submitted in advance. So if anybody has further questions, you feel free to pop it in the chat box or raise your hand. We have plenty of time. Our last question is from Amy of Interconnection. She has a broad question about budgeting best practices. So Amy, we'd love to hear from you if you want to ask a little more about your question.
Yeah, thank you. I just really, we've never had a good budget set up, and so I want to make that happen. I mean, 2020 has kind of thrown everything up in the air as far as that goes, but is there just some tips, best practices for getting started from scratch on making a budget for our company?
Yeah. I think it's one of those things where I think it can be you can overthink it. Really simply, if you have bookkeeping done, you want to run the P&L report for the last, 3 months, because that's probably most likely, or last 6 months, depending on, what average data you want to pull from. And then really you can just, it depends it's more of a question of how you want to look at your budget. So if you want to look at it in buckets of categories, you can definitely use the P&L from your QuickBooks. And then that's where you start, right? You look at, well, what's the average in the last 3 months, with consideration if you made changes to it, like you canceled it or whatever. And so then you can, download it into a report, into Excel, and then you can replace those numbers with what you really think it should be or what it is now. And that would be your starting point as your budget. And you would just pull that budget across the board. So most of your stuff, right? Most of your budget are overhead, meaning your, rent, your software, your telephone, your utilities are pretty consistent month to month. So once you can decide what is that amount that I'm going to be spending or allowing myself to spend, then once you decide that, then it's a matter of just maybe copying it across for the next 12 months. And then in terms of best practices for maintaining budgets is, number one, build a report budget and put some colors, make it aesthetically appealing so you actually want to look at it, and you can make it as detailed as you want. So for some of our clients, we can say something like, instead of saying IT software, we actually break it down. We say Xero, we say Google Apps. We list it out because the client really wants to be aware of how much they really budgeted to that software every month, right? But then after you do that, what you really need to do is get in a practice of looking at it. It's one of those things I mentioned where every month you need to take your actuals, meaning from your QuickBooks, and put it side by side next to your budget. And then on the third column, you want to calculate the difference between it. And it is the practice of seeing if there's a variance, if there's a difference, and then asking yourself why. It is that practice that makes the budget for what it is. If you're just creating a budget because there's a budget and you don't do that exercise, it's not as meaningful because you're not trying to figure out if you're really committed to the budget or if there's something about your business that is making you not committed. And remember, budgets can change through the year. So what you have the budget this month, you might decide it's going to be different for the next 3 months. So you can continually modifying your budget, but what you need to do is compare if you're actually staying on top of that budget.
Okay, great. Thank you very much.
Thanks. So I'm happy again to have anyone ask any additional questions. We've gone through all our pre-submitted questions. You're welcome to raise your hand and I can call on you. If we don't have any questions from anybody, I have some questions that I feel like I've heard from members in the past, so I'll start in on those. And if they spur anybody, encourage anybody to ask additional questions, feel free. What are the best accounting tools beyond QuickBooks? I hear from members at QuickBooks can be daunting. So do you feel like there are any other accounting tools that offer the same or similar benefits but aren't as complex as QuickBooks?
Yeah, I think, if you're thinking about, there's two main competitors for the small business market. There's QuickBooks and Xero. Okay. And why they're competitors are because of the features that it has, which is allowing professionals like myself or allowing the company to do some comprehensive accounting or comprehensive analytics. It has better reporting. It's a little bit more comprehensive in managing your business. So that's why Xero and QuickBooks are some of the most preferred. Outside of Xero and QuickBooks, and honestly, if you want to do accrual accounting or really understand your profitability, you should be using one of those too. Now, there's also up and coming software like the Patriot software, there's Wave Accounting. There's a lot of software out there that just calculates your income and expense directly, just straight income and expense, but don't have any other accounting function. So that might be helpful if you want to get started and don't feel like if you just want to know how much money you got and how much money you spent, those would be good enough. Like, anything that can categorize money would probably be good enough. But like I said, if you're talking about real accounting of comprehensive balance sheet and financial statement, it's really just Xero and QuickBooks. Now, I know you asked for simple, but those are I think one of the simpler tools, and I know you said it's not as simple, but it's really the only field that's available in the marketplace right now. You can also, if you're a really small business, like a sole proprietor or something like that, you may not need to do this in the first couple of years. You may just want to get in the habit of just downloading your bank online banking transaction and just coding it that way. If you learn to do a pivot table, it's also very easy. So that could be, some people find that easier and also works.
Great, thank you. Can you explain a little bit what individual business owner should be handling compared to what a bookkeeper or accountant should be handling? I realize it's a relationship, and so it's good for probably our members to hear how they should be prepared and what kind of things they should handle and what a bookkeeper or accountant should handle.
Yeah. It really, if you asked that question, it really depends on, who's your bookkeeper or really what you like to do. Accounting, in a sense, is really anything that touches money or value in your business. So an accountant or accounting firm or a bookkeeper or controller, any one of those titles, have the ability and the potential to handle literally anything that touches money and value in your business. This includes paying your bills, entering your bills, reviewing your emails from your vendors, collecting money with you, or payroll processing, filing your taxes, doing your bookkeeping, sitting down and talking to you about your reports, talking to you how much money you'll have next week or next month. They can do all of the above. It really depends on really coming up with a list of what do you need now, and of that list, what do you like to do and what you don't like to do. And then of the list that you don't like to do, then you want to then hire an accountant or bookkeeper, get quotes to see, to get bookkeepers or accountants that can deliver on those services. So you want to be very, very strategic in hiring who your accountant is. So some accountants will just be bookkeepers, meaning they just do data entry and they don't really think about your business. They don't have those discussions with you. They can tell you what they did, but they can't tell you where your business is going. And then there are other accountants that are more operational integrated, meaning they can, help you organize your technology. They can really understand what dashboard you're trying to create, or maybe help you identify or investigate something. And then there are, accountants that go above and beyond, that have some CFO training that can really once in a while sit down with you and talk about something that's on your mind. So you either hire one or multiple types of accountants, but what's important is really determining what you need right now, that list, and what you like to do and not like to do. And then the things you don't like to do, it's very potential you can outsource it.
So for me, that's a kind of follow-up question. So when you're looking to hire a bookkeeper and accountant, you can go in and have a conversation about what sort of things you are hoping to take off your plate and what things they can manage. So my assumption is it's not that every client that you work with, you offer the same services, but you can actually ask for various things that you want or need.
Right. So good questions for your accountant is like, you first have to peer inside you and see what type of relationship and partnership you want to have. And then it'd be good to interview your bookkeeper or accountant, and ask them, the service you're offering me, the bookkeeping you're offering me, are you interested in creating the bookkeeping so that I can just send it to my tax CPA and fill out a tax form? Or are you interested in doing my bookkeeping because you're interested to be part of the understanding curiosity of my business growth and scalability? So you can have an amazing CPA firm that has a team doing your bookkeeping, but they have no interest nor concerns or curiosity about what happens in your business. All they know is data entry, your income and expense in such a way that makes sense to the IRS, and the end goal is to file your taxes. So like I said, it's very important to interview your bookkeeper and say, well, as an accountant or bookkeeper, based on the service you're offering, what is the purpose of your service? What is the purpose of your company? And then you want to see if that purpose aligns with what you need right now. Are you more concerned about taxes, or are you more concerned about, or you need a partner to have a conversation with, or are you needing someone who can look at your operations and really jump in whenever they need to? Or do you need someone to just, pick up the phone, or do you need someone who can do analytics and explain things with you? So really interviewing them and say, what is the purpose? Identify if that purpose meets your need right now, and then interview them for the skill. A lot of people tend to interview for the skill and not really understand the end goal of what you're trying to do as a partnership.
Great, thank you. Brittany submitted a question, and I can let Brittany speak to this more. She's asking about recommendations for setting up bank transactions to automatically upload to QuickBooks, or is it okay to manually type them in? Brittany, do you want to explain a little bit more your concern around this?
Sure. Yeah. So just a technical question, but I am behind on my books. I'd really like to get them updated, and I wondered if you recommend linking the bank, or in the past, I've always, done everything manually, but I don't know if I'm just if it's slowing me down.
Yeah. If you have QuickBooks Online or Xero, or any one of those accounts or any software, you should be able to import transactions and then also link your bank. So if you're behind, your QuickBooks program will not be able to download more than 90 days prior. And so you have all these days, let's say you're 6 months or 12 months behind, well, you have a lot more data that you need to get into your books than what the software is able to do when you sync it, right? So you can actually go to your bank, download the transactions into a CSV format and import it into your QuickBooks. Now, I recommend you do that when you are cleaning up your books, because it's a lot faster. So what you can do is when you import it, your business only have a few things that repeats itself. So let's say it's Starbucks, right? Starbucks coffee. You can immediately go to the Intuit automation tool and say, for all the transaction that says Starbucks, code it to meals and do it automatically for me. So let's say you have 1,000 transactions outstanding right there. Immediately the software will be able to code all Starbucks like that at once within a couple minutes. So if you go down the list of all the vendors, a few vendors that you have, and you do that, pretty much nearly at least half of your stuff is done. And then, or even 75, I've seen it, done completely. And then there's just a few things like a check here or there that's really confusing that you kind of have to go in the system and kind of tell the system what account to code it to and what payee it is. But definitely use the system to your advantage. There's a lot of automation in QuickBooks. You can do it pretty quickly. There's no need to look at your bank account and then open a data entry module and then typing each thing. And there's no need to do that. You should not have to enter like 3 or 4 of those areas. You should only just confirm and verify and then reconcile.
Oh, wow. Okay. That's very helpful. Thank you.
Great. Thank you. So next question I have goes back to our cash flow topic. And could you let us know what some early signs of cash flow issues are? So people that are working on this now saying, okay, long term, I'm looking at some issues and I want to tackle them now.
Sure. Well, the early signs, if you're asking the questions of like, will my money last, right? The early signs is really looking at your profitability and looking to see if you have a net profit. So in most business, if you have a net profit and a really good strategy on purchasing inventory, then your cash flow should be sufficient. Now, the only way to detect if you have cash flow problems, to be honest, is to forecast it, to really forecast it. Like you take, like I said, what you know right now, and you forecast it, 12 months from date by week. I don't know, like just keep going. And then even if you do that and your margin of, you know that your accuracy level is only 75%, great, just do it, right? When you do that, you will be able to see when your cash ending becomes a negative. Right? It's when it becomes a negative that you get to spot, oh yeah, on week 6, or no, in October, I'm going to run out of money. Or in October, I'm going to run out of money for a week and then have money the following week. Weird. So you'll be able to see this, and by peering out all the time, even though you're not going to be 100% accurate, you'll be able to pulse when you need to take action, and you can actually take action right now. If I know 6 weeks from date, there's this promise I made to this vendor, but my customer said they're going to pay me the following week, well, I might pick up the phone call and call my contractor and say, hey, is it possible I pay you a week later? Or call my customer and say, hey, can I offer you something to pay me sooner? And so that you can help yourself doing that. But in terms of financial management, monitoring your profitability and then monitoring the forecasting of your cash position, both of them are very important to managing cash flow. If you don't have a net profit company, and obviously we don't, or most of us don't right now, then you're eating into your debt. And so you really need to know with the money you do have and at the rate you're burning, how much further do you have? I don't know if I answered that question, but it's a good question.
Yeah, I think it's helpful. We have about 10 minutes left. If anyone has any additional questions, feel free to pop them in the chat box or raise your hand. I would love to hear about your office hours and how members might take advantage of those.
Yeah. So Pretty Books is very, we really want to support the community. I started as a consultant or, bookkeeper, independent bookkeeper when I was very, very young, right out of high school. My first client was right out of high school. So, I'm where I am only because I had so much support from the community, and a lot of my clients turned into great mentors. And so considering that, I have a strong value of making sure that we're giving back. So our office hours is on our website, prettybooks.com. It's under the resource page, and in the resource page there, the first thing you'll see is a button that says office hours, and you can click on that. It's a calendar, and you can schedule, I think, a 30-minute meeting with us, with any one of our team. We'll assign a team member to you, and to discuss anything you want to discuss. So if it means talking about a question like you had today, or going deeper, we're here for that 30 minutes with you as much as we can. And we don't have limitations, so it means that if you need it again next month and there's a slot there, then take it. Like we're not keeping track of this.
That's great. Such a great offer. So unless anyone has any further questions, I think we can wrap it up for today and finish a little bit early. Thank you so much. Oh, okay, Stacy, you have a question. Feel free to unmute yourself.
Just wondering if you're accepting new clients, Kristine.
Yes, we are always accepting clients. We don't have, people often ask if we have like a particular segment of clients or something like that. My answer is I love working with business owners who are enthusiastic about their business and are enthusiastic about being inspired with their numbers and telling their story. So we're always accepting clients, and no matter what their size is.
Okay, thank you.
Great. I think that's it for today. We will follow up today with the deck and some links from Kristine and her team, as well as a little overview of all the things we chatted about here today. So you can be on the lookout for that. Thank you so much. We appreciate everyone being here and for all your support and support of our members in Seattle Good Business Network. Thank you, Kristine.
Thank you. Appreciate it, Andrea. Thank you, everyone.
Take care, everyone.
Thanks a lot.